So, yesterday I discussed with you this email that I received from Mr. Pramod Namdar. I took the example of Loris Labs to discuss this. Here is the email. Hi Rohit, I can see that the MarketSmith UI and display of stage value are different now. Can you kindly make a video to explain the changes? Below is a sample flat base pattern and its stage value. I am not able to understand what do you mean by stage 1 bracket 1. Thanks and regards, Pramod Namdar. Now I forwarded this email to MarketSmith and MarketSmith has replied back. But before I show you the reply, I encourage you to, sorry, I encourage you to, sorry, not this one, to check out this video which I made. Yeah, MarketSmith tutorial interpreting stage 3 bracket 8. In this, I have already explained the answer to this question, but I also forwarded this email to MarketSmith. I wanted to get their response, and here is their reply. This is the reply from MarketSmith that I received today morning. Today is Monday, 8th of September. So this is what they write. Dear Rohit, thank you for writing to MarketSmith India. We understand that the updated MarketSmith user interface may look a little different, and we are happy to clarify what the stage value represents. In our methodology, each base formation, cup, flat base, double bottom, etc., is assigned a stage number. So, stage 1, the first base after a stock emerges from a long downtrend or consolidation, typically the safest early entry opportunity. So, as I told you, you can just replace the word stage with a base. So, stage 1 for us means base 1. Okay. Stage 2, the second base. See, they mention here it's a base, it's not a stage. The second base after the stock has already had one breakout and moved higher. Higher means 20 to 25%. Still strong, often very profitable. Stage 3 and 4, they are calling it later stage basis. In my teachings, I call stage 1 and 2 as early stage 3 as middle stage 4 and 5 are late stage. They start stage 3 and 4 as late stage. Okay. They call them late stage. These are riskier because the stock has already had a long advance. So the stock has already gone up 50% from the low, around 50% from the low, not from the low, from the breakouts. From base 1, from base 2, minimum 25%, that's 50. Plus from the bottom till the base formation, that could be another, say, 20%. So the stock has had a big move. That is why they call stage 3 as a later stage base. These are riskier because the stock has already had a long advance. Institutions may begin distributing, and such bases are more prone to failure. Remember, base 4 and 5, their failure rate is 80%. So when you buy a stock at base 4 or base 5, there is a 80% chance that you will lose money. Okay. This is written in William O'Neill's book. Why you see stage 1 bracket 1? Now this is important. The number before the brackets 1, the stage of the base. Here stage 1 is equal to first stage of the uptrend. So this is what I discussed in yesterday's video, in this particular video. Okay, so please watch that video before you watch this video. So stage 1, this part means base 1. The number inside the brackets is the count of the base within that stage. So let's say it is stage 1. So it could be stage 1, 1, stage 1, 2, stage 1, 3. So it is a sub base basically. For example, stage 1, 1, the first base of the first stage, early in its cycle, just coming off the bottom. So they are saying that within that their stage 1, they are calling it base number 1. Stage 1, 2, a second base that still falls under stage 1 often happens when bases form close together or overlap. Okay, so if a stock breaks out, doesn't go up 25% and starts forming another base, that's called overlap or close base formation. This terminology is, in my view, it is partially correct. It's not 100% correct because they also write base 1A, 1B, 1C. That is not mentioned in this email. Now, I am not thinking of replying to them. I am just taking this email and I'm just forming conclusions. I don't want to do back and forth email with MarketSmith. If I ask them about stage 1A, 1B, 1C, they will have a reply for me, but I don't want to get into that because I understand the basic idea what they are trying to convey. Why this matters? Stage 1 and 2 bases are historically the most powerful. Many of the biggest stock market winners have launched from these stages. Later stage bases, stage 3 and 4, generally carry higher risk. So position sizing could be more cautious. So this is consistent with what I have been teaching. We hope this clarifies your query. Please get in touch with, and so on and so on. This email came from Varun Nayak, Associate Customer Support, MarketSmith India, Bangalore. This email is partially correct. Okay. We will replace the word stage with base. So this is base 1. This is nothing but the count of the base, not within the base, but count since the stock started making an up move from the uh, bottom. Okay, because we have noticed in Loris Labs chart that, just a second, let me go in. So have a look at this. See, this is stage 3, 8. Okay, so as per their email, this should be stage 3 bracket 1 because they are saying that this is base number 1 within stage 3. But here it is mentioned as 8. So that is why I'm saying that email is partially correct. It's not fully correct. So the person who sent me email, Varun Nayak, probably he does not have full understanding of what he's mentioning in the email. We need a more technical person to answer this query. Maybe he is representing the customer support team, but we need a more technical trader within MarketSmith India team to answer this query. Okay. So if this argument is correct, then how come here it is showing stage 3, 8? It should show, say, stage number 3 bracket 1 because the first base within stage 3. But I have already given you explanation in the previous video. This is stage 3, 8, stage 2B, 7. And in the email, nowhere has there has been any mention about 2A, 2B, 1A, 1B, 1C. See, this is 1E. So in the email, he does not talk about 1A, 1B, 1C. So that's why I say this email is partially correct, not fully correct. But if we combine what is written in the email and what I have observed on the Loris Labs chart, you basically get the understanding that you replace the word stage with a base. The next letter or the number would be the actual count of the base, which we are concerned about. Then 1A, 1B, 1C represents the sub base within that base. So you have a base, you have a sub base, and in the parenthesis, in the brackets, it is just a flat normal count ever since the stock began to make a move. So 1A is equal to 1, 1B is equal to 2, 1B is 1C is 3, then 2A will be 4, 2B will be 5, 3A will be 6 and so on. Okay. So you get the point, right? Let's not make it too complicated. Let us keep it simple. If it says stage 3, that's base 3. It's as simple as that. Okay. Let's keep it that way. But I hope I have done enough discussion on this topic now. It's very important. The base count is extremely important because you don't want to end up buying a stock in the late stage. So if we go to the orange trading system, the whole discussion here is because of this technical part. The base count comes as a part of technicals. So you might have good liquidity, good comparative, market may be confirmed uptrend, fundamentals might be strong, but if the stock is trading at base number 7 or base number 8, no point in getting into the stock, right? That's why I did this discussion. Thank you so much.